The Reserve Bank hikes interest rates, but by less than expected. The ASX has its best day in months, adding $81 billion to the market. And Kim Kardashian gets into trouble over spruiking crypto-currencies. It's Wednesday, the 5th of October, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. How are you today?
I'm going pretty well. I am assessing the cost of the latest interest rate hike.
Well, look, we've got a headline today about interest rates up, share markets up, and Kim Kardashian.
You know what? That actually struck me. As I was saying, I'm like, it's a very odd trio there, isn't it?
You don't normally put them together. That's true.
Well, it's very rare that Kim Kardashian actually makes an appearance on Fear and Greed at all, let alone in the headlines. That's how good that story is.
I've become a big Kim Kardashian fan. I haven't never really watched the show, to be honest, but I've just done quite a bit of reading, I don't know, in the last 12 months just about her, what she's done with her business empire. And I've seen the show just occasionally, and it's voyeurism at its finest, but she's quite an incredible businesswoman.
Yeah. If you put everything kind of to do with the show to one side, the business stories associated with the Kardashian Jenner family it's quite extraordinary. The success that they have had and the money that they've made and the way that they've kind of used the new wave of media and social media to their advantage and to build this empire is really quite impressive.
Do you think they need to listen to your new podcast? With Kenny Campbell? How do they afford that?
You know what, Sean? I'm very glad for the segue and so naturally worked in there as well because I suspect they probably don't. Though we are more than happy if they want to listen to it as well. But, for anyone else who is like me kind of assessing how much the latest interest rate hike is going to cost your household budget, how do they afford that is a fantastic podcast to listen to because it's all about the cost of living. As you mentioned, it is with Kenny Campbell from financial literacy platform Sugar Mama TV. It's all kind of tips and hints. And your favourite, Sean, hacks. Helping you to make your dollar go just that little bit further.
I don't want to go into this too much here, but the use of the word hacks in your podcast is dodgy.
Really? What?
Here's a hack for you. What do you mean a hack?
Oh, Sean, I'm sorry. That does make you sound as though I
am my age.
You haven't been listening and researching the Kardashians and that you are not in touch with the new generation coming through. Perhaps. Everything is about hacks. If there is an easier way to do something, that's a hack.
Yeah.
Okay. You're clearly not on board. Anyway, heaps of tips, hints, and just for you, Sean, plenty of hacks. You can find it wherever you listen to podcasts, obviously. How do they afford that is the name. We've also got a link in today's show notes. Anyway, Sean, you've got an interview today with, I reckon, one of my favourite business people, entrepreneurs, Janine Allis, the founder of Boost. She is a fantastic business person.
This is like a show of famous people. Yeah. Kenny Campbell, Kim Kardashian, Janine Allis. It's pretty good. Yes, we talked to Janine all about how she started Boost, but then we really go into how her career has progressed. And by the end of it, we're talking about why did you go on Survivor? How did you last 44 days on Survivor? And she's quite funny about it, actually. It's well worth a listen. Yeah,
it is a really good chat. It's coming up a little bit later on. But the main story this morning, Sean, is the Reserve Bank lifting the cash rate by really a smaller than expected 25 basis points yesterday, which sent the Aussie dollar lower, bond prices higher, and added to that surge on the ASX.
The decision wasn't totally unexpected, though it wasn't the consensus view. Most economists thought the central bank would lift the cash rate by 50 basis points. The Reserve Bank board said while more rate rises are likely, the official cash rate has jumped sharply already, don't we know that? And effectively, the central bank wants to take a breather and see what's going on with inflation and economic growth. It certainly shows that while the Reserve Bank is focused on inflation, it's also keeping an eye on economic growth, which it must do under its charter. The bank made it clear that inflation remains too high due both to global factors and strong domestic demand. It expects inflation to keep rising before eventually falling back towards its 2 to 3% range. Importantly, and the bank points this out, medium-term inflation expectations remain well anchored.
So, Sean, obviously self-interest here. What does it mean for homeowners?
Well, mortgage repayments are going up again, and National Australia Bank has already put up its home loans by 25 basis points. That's the bad news. But They're not going up by as much as most people thought this time yesterday. Rates are now 2.5% higher than they were at the start of May after 6 consecutive increases in the cash rate. On a $750,000 mortgage, the quarterly percentage point increase yesterday lifts monthly repayments by $110. If you take all of them since May, repayments are up by just over $1,000 a month.
And Sean, this came as Treasurer Jim Chalmers said Australia won't be immune to a potential global recession.
Dr. Chalmers said the global situation has gotten much worse even the past few weeks. He's trying to set the framework for a budget late this month. We must remember that. And the Treasurer pointed to the fact that the OECD, the International Monetary Fund and the World Bank, none of them have ruled out a global recession as yet. He said that rising interest rates combined with high and rising inflation and a gloomy economic outlook would affect the government's first budget. Putting all this together, what I find quite interesting is that while other central banks, notably the US Federal Reserve, wants to keep lifting interest rates to cap inflation, even if that does mean a recession, the Reserve Bank seems just a touch more circumspect, or maybe it's just more confident in the local economy.
Okay, so how did local financial markets react to the news?
Well, the ASX was doing pretty well before the 2:30 p.m. announcement, thanks to a very strong lead-in from Wall Street. And then it jumped again when news emerged that it was only a 25 basis point hike. By the end of the session, the S&P ASX 200 closed up 3.6% to 6,688 points. That's worth about $81 billion. That's not bad for one session. In short, investors are buoyed by the likelihood of fewer interest rate rises, which in turn shouldn't harm the economy and earnings as much. At least that's the theory. Tech stocks led the way yesterday with the tech index up nearly 5%. Materials companies, energy stocks, real estate investment trusts and financials all rose by more than 4%. Michael, it's like Christmas, really. ANZ and Woodside Energy jumped around 5%. Commonwealth Bank and Macquarie Group were up around 4.5%. Goodman Group jumped nearly 6%. WiseTech Global was up more than 7%. But Michael, spare a thought for the Lottery Group. That's part of the demerged Tabcorp. It was the only stock of the top 200 yesterday to go backwards.
The only one?
Yes, one of 200 went backwards.
Ooh.
The Lottery Group.
Ouch.
Exactly. In corporate news, drugs retailer Mayne Pharma said it completed the $475 million sale of its Metrics contract service drugs portfolio. Its share price jumped 4.4%, and lithium player Sayona Mining share price finished up 16%, best on the day, after the company accelerated plans to expand its lithium operation in Quebec.
Okay, now I want to ask you, Sean, about what happened elsewhere outside equities. But in doing so, I know I'm going to get a lesson in bonds here, aren't I?
Oh, yes. Very exciting. Because actually some of the biggest ramifications from the decision hit the bond market. Investors have been wary about buying bonds, fearing that higher interest rates in the future will make the bonds you buy today less attractive. But the shift in sentiment about the course of future rate rises triggered a reassessment. So investors started buying bonds again, pushing up their price, which means their yields fall. The yield on a one-year Australian government bond fell 36 basis points, or 11% to 2.83%. 11%. Can you imagine if your share portfolio fell 11%? Pretty incredible.
That's huge.
It is. The decision didn't help the Aussie dollar either. It had rebounded ahead of the announcement on the back of data out of the US suggesting the Fed may not lift rates quite as much as expected, but then the smaller hike in rates was announced. The Aussie dollar lost half a US cent. It then started clawing its way back. It's currently trading somewhere between 64.5 and 65 US cents.
And what about international markets?
Well, Wall Street had rebounded yesterday morning, which provided a strong lead into the local markets. Investors seem to want to buy, but very few are actually calling the bottom of the market at the moment. There's a bit going on in commodity markets. So benchmark Newcastle coal futures fell 8% to back below $400 a tonne. It came after China said it would raise coal production capacity by 300 million tonnes this year. Now, that's actually about the amount China imports each year. Mind you, coal prices do remain elevated. The price of gold also shot back up. It's back above $1,700 an ounce, and silver prices jumped sharply, the most since February, in response to US bond yields falling lower.
What a massive day, Sean.
Yeah, great day to be a journalist and just watching this unfold. It really was fun.
Yeah, sure is. And there's actually plenty of other stuff happening as well. We'll be back in a moment with the rest of the day's business news. Sean, it seems Telstra is now managing a cyber event, albeit much smaller than rival Optus, with 30,000 current and former workers having their names and email addresses uploaded to the dark web.
Telstra says it's not a hack. Apparently, a third party, which was offering a rewards program for staff, had the data breach back in 2017. It doesn't involve any customers and wasn't a breach of any Telstra systems. Still, it does show that everyone needs to be very, very careful about arrangements with third parties, whoever they are.
A bit of a follow-up from yesterday's story, Sean, about housing prices. The value of lending for housing dropped 3.4% in August, with investor lending tumbling most.
That's right, but there was some good news with first home buyer lending up sharply, presumably thanks to the drop in house prices. Lending for investors fell nearly 5%. Lending for owner-occupiers was down nearly 3%, let's say. But lending for first home buyers jumped 7%. Overall, housing lending is about 12.5% below where it was a year ago. It will go further because interest rates will continue to rise. Meanwhile, building approval figures jumped a massive 28% in August after a big 18% fall the previous month. Now, this Bureau of Statistics series is notoriously volatile, but if you look at the trend, building approvals have effectively moved sideways, neither up or down, in recent months. The big rise in August was due to approvals for apartment buildings.
And finally, Sean, as I always say, you can never get too much economics. Actually, I can assure you I have never said that before.
Never.
But job advertisements fell a bit last month.
Yeah, it was a mega day for economists and markets yesterday. The ANZ job ad series did show a slight fall, but they remain more than 22% higher than a year ago. There are some signs that momentum in new job vacancies seems to be stalling, which isn't surprising given the unemployment rate is 3.5%, and there seems to be some sort of slowing in the economy as a result of rate hikes. But Michael, I promise, no more economics this podcast.
Okay. You will find that hard to resist. I'm sure you'll find it. Just sneak something, maybe into the international section.
We'll see how we go.
We'll see. Now, we love a good wine story, Sean, and almost half of consumers are looking for more health-conscious options in wine. And as a result, Treasury Wine Estates is accelerating its push into low-alcohol or no-alcohol wines.
That's right. The owner of Penfolds and Wolf Blass said there's a global trend led by under 35-year-olds to drink wine with less or no alcohol. Now, the challenge for winemakers is to make sure it tastes okay, and Treasury plans to invest heavily to do that. It involves using de-alcoholization technology that can replicate the mouthfeel, aroma, and taste of alcoholic wine, but have no alcohol in it. Treasury already has low or no alcohol versions of its Wolf Blass and Squealing Pig brands. And Michael, it's not only wine. According to the Financial Review, Endeavour Group, which owns Dan Murphy's and BWS outlets, says low or no alcohol beer is becoming increasingly popular. It's one of its fastest growing segments. It now has 300 such products in its range.
Yeah, it is absolutely booming. Now, Sean, this story seems like it's the takeover that just never goes away. Canadian suitor Dye & Durham have lobbed a $1 billion bid for the corporate markets division of Link Administration.
If you can't get the whole business because of pesky UK regulators, and that's what happened last week, how about just bidding for the piece you really want? And that's the corporate markets business. It provides shareholder management and analytics services, including share registries and company secretarial support. According to media reports, Dye & Durham made the $1 billion offer for that part of the business, but apparently Link isn't interested. We've heard this song before.
Yes, we certainly have. All right, moving on to overseas news, Sean, and Ukrainian forces have broken through Russian defences in the south of the country and have expanded their offensive in the east.
Ukraine has now seized territory in areas that Moscow annexed, and the action is threatening supply chains back to Russia. In the south, it's the biggest advance since the war began in February this year. It comes as Moscow continues to annex territory, ordering mobilizations and threatening nuclear retaliation. Ukraine has now made significant advances in 2 of the 4 Russian-occupied regions Moscow annexed last week.
North Korea has fired a ballistic missile over Japan for the first time in 5 years.
The missile launched yesterday, triggering a rare public safety warning in Japan. It eventually splashed down in the Western Pacific, about 3,200 kilometres east of Japan, according to Bloomberg. Japanese Prime Minister Fumio Kishida condemned the launch. The test represented the longest-range weapon fired by North Korea since May.
And finally, Sean, we gave plenty of notice that this story was coming. Kim Kardashian has agreed to pay $1.3 million to settle charges with the US securities regulator for promoting a cryptocurrency without actually saying that she was paid to do so.
Apparently, Ms. Kardashian didn't disclose a $250,000 payment she received to post about crypto security tokens sold by Ethereum Max on her Instagram account. Now, this is according to the Financial Times. Kim is pretty influential. She has 331 million followers on her Insta account. Kardashian last year asked her then 225 million followers, and I quote, "Are you guys into crypto?" in an Instagram post that drew attention to Ethereum Max, which was a new coin at the time. The post really was emblematic of a ballooning trend involving celebrity endorsements of cryptocurrency assets. The Ethereum Max tokens, a week after she posted it, it had risen, shed 70% of their value. Incredible. And it triggered a separate class action lawsuit that accused Kardashian and other celebrities of helping boost the coin's price in a scheme that benefited its backers but hurt investors. That particular case is making its way through the federal court, but Ms. Kardashian has agreed to pay the $1.3 million to settle charges with the securities regulator.
Yeah, it's a fascinating case, that one. All right, up next is the Fear and Greed Daily interview, and we mentioned this at the top of the show, Janine Alice from Boost Juice.
That's right. We talked to Janine about everything from having kids and working when you're having kids, being an entrepreneur, building Boost, working with a private equity group as your partner and how you go there, going on Celebrity Apprentice, going on Shark Tank, going on Survivor, very wide-ranging. She's a cat. Janine's a lovely lady and very entertaining.
Yeah, absolutely. I was so glad that you asked her about Survivor because I'm a big Survivor fan. And watching Janine on Survivor, she was an absolute machine. She was just so incredibly fit, but mentally tough as well.
Yeah, that shines through in the interview.
Yeah, it really does. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 5th of October, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, Facebook, and I suppose, Sean, in light of Kim Kardashian, we should also mention join us on Instagram.
Absolutely.
I'm Michael Thompson, and that was Fear and Greed. Have a great day.